All right, let's just jump right in. The price of gold is on an absolute tear, smashing records left and right. And it's got a lot of us asking a pretty simple question. What in the world is going on? Today, we're going to unpack the story behind gold's incredible surge. First, let's just let the scale of this sink in. $4,000. That's the new price tag for a single troy ounce of gold. Now, to give you some perspective, that price has basically doubled in less than 2 years. This isn't some small market bump. This is a seismic shift. And that leads us to the real mystery we're digging into today. You see, the biggest players here aren't the usual investors you might think of. It's the world's central banks. So the question is, why are they suddenly stockpiling gold like there's no tomorrow? That's the real story. So let's get into this $4,000 question. Who exactly is driving this massive rally? Well, it turns out it's not your everyday Wall Street traders. The key actors are a very powerful, very cautious group of institutions, and they're making a huge bet on this ancient metal. And check out these numbers. In just the first half of 2025, central banks added a staggering 410 tons of gold to their reserves. I mean, that is a huge number. It's 24% higher than the 5-year average. So yeah, this isn't some flash in the pan. Analysts are calling this a structural shift in how global capital is moving. They aren't just buying, they're buying with serious conviction. So that gets us to the motive, right? In a world that just feels more and more unstable, these central banks are looking for an anchor. They're trying to hedge against chaos, searching for something permanent in a really volatile time. And let's be real, it's not that hard to see why the world feels riskier. You've got ongoing conflicts, you've got this nagging economic uncertainty that just won't go away, and bond markets have been on a total roller coaster. And on top of all that, you have this growing crisis of confidence in traditional fiat currencies, government-issued money like the dollar or the euro. Their value is basically built on trust, and right now, that trust is starting to look a little shaky. And this quote from Hugo Yatsliak it perfectly captures the psychology of what's happening. For years, the name of the game was chasing the highest return, right? The best yield. Well, that game has changed. Capital isn't just chasing profit anymore, it's running for safety. And for literally thousands of years, safety has had one name: gold. This instinct is nothing new. It's practically baked into our DNA. During the Great Fire of London way back in 1666, the famous diarist Samuel Pepys literally buried his valuables in his garden. And while he famously buried a wheel of Parmesan cheese, most other people buried what they trusted most: their gold. It's the ultimate go-to asset when everything else feels like it could just go up in smoke. Okay, so that's clue number 1, this general feeling of chaos. But there's another piece to this puzzle, and frankly, it's a huge one. This trend isn't just about running to gold, it's also about running from something else. And that something else is the US dollar. So you hear this term a lot lately: weaponization of the dollar. What does it actually mean? Well, since the whole global financial system is pretty much built on the dollar, the US can use financial sanctions and controls as a really powerful foreign policy tool. And after Russia's invasion of Ukraine, the rest of the world saw just how powerful that weapon could be. For a lot of other countries, that was a major wake-up call, that their dollar assets might not be as safe as they thought. And if you want hard data, look no further than China. Back in 2011, it held about $1.3 trillion in US debt. Today, that number has been slashed down to around $765 billion. So why are they doing this? It's simple: to reduce their vulnerability. And while they've been dumping dollars, guess what they've been buying? Gold. This is a very deliberate, very strategic retreat. So just put yourself in the shoes of a central bank governor for a second. This chart lays out the choice they're facing. On one side, you have the dollar, which is subject to sanctions and political influence. On the other, you have gold. It's physical, it's politically neutral, and you can't just print more of it. If you're a country trying to secure your financial independence, which one looks like the safer bet? The answer is becoming pretty obvious. And that brings us to our next factor, which is kind of like pouring gasoline on a fire that was already burning. The perception of growing political influence over America's financial system is pushing more and more countries to hedge their bets, and fast. So here's the core concern a lot of experts have: the potential politicization of the Federal Reserve. The fear is that the dollar, which is supposed to be the stable anchor for the entire global system, could have its strings pulled for political reasons. And that would make it less of a reliable currency and more of a strategic weapon. So how could this actually happen? Well, experts point to a few potential pathways. First, you could have a lot of public pressure on the Fed to do things like cut interest rates for short-term political wins. Second, you could appoint a Fed governor who is loyal to the executive branch. And third, and this is a really fascinating piece of history, there's something called the Gold Reserve Act of 1934. It actually gives the president and the Treasury Secretary enormous power over the dollar's international value. And their actions are, get this, final and not subject to review. Wow. And that brings us right back to this killer insight from Ugo Yatsliak. Central banks, at the end of the day, don't necessarily fear any single politician. They fear uncertainty. They fear politicization. And when the anchor of the whole system starts to look political, they double down on their insurance policy. And that insurance policy is gold. Okay, so we've followed the clues. Global chaos, strategic retreat from the dollar, and fears about political influence. So let's take a step back and look at what this all means for the bigger picture. We're talking about the new rules of money. What we're witnessing here is a really profound psychological shift. The old mantra was yield at any cost. Now, the new priority is resilience at all costs. It's a fundamental move away from just chasing profit to ensuring survival. Capital is literally migrating from assets that offer returns to assets that offer protection. And if you think this trend is slowing down anytime soon, think again. Major players like Goldman Sachs are already predicting that gold could hit its next major milestone, $5,000 an ounce. They're seeing all the same underlying forces that we've just talked about, and they think this has a long way to run. So what's the big takeaway from all of us? The most crucial point is that this whole story, it isn't really about a shiny metal. This isn't just a bunch of finance nerds getting excited about a commodity. This is a story about the world we're living in right now. This gold rush is a signal. It's a massive, flashing neon sign. It signals a deep crisis of confidence in our traditional financial systems. It signals a structural shift away from a world that is completely centered on the US dollar. It signals a global scramble for sovereignty and for financial independence. And it signals a new era where geopolitical risk isn't just some side issue. It's the main event. And that leaves us with one last big question to think about. As all these nations pour their wealth into the oldest form of money known to mankind, are they just running away from risk in general? Or are they running away from the dollar itself and the entire world that it represents? The answer to that question is going to define the next chapter of global finance.